All right, there we go. I think the camera's working here. Sorry about that, guys. I don't know what was going on with my camera. I tried plugging in, unplugging it like 10 different times. Hopefully this is popping up. It looks all right. Let me just make sure that this hooks here together. All right, here. Just make sure everything's updated to where it's supposed to be here. Enable that. Refresh the sheet. Is that what it has? NNBR? Okay. You were looking at that last time. Oh, that's on too. Okay. Let's blow this up so you guys can actually see it on there. I just want to make sure that this is updated real quick, guys, before I start. Hope everybody had a nice holiday. Once again, I apologize because I'm having all these stupid issues getting this started, but I think everything's good now, so we'll get started. Cheers to everybody. Let's hop over to the dashboard here. Just see if anything big was moving today. Just like to take a peek here. Some of the commodities type stuff. I haven't even looked at sugar in forever, so I don't really know quite where. Oh, it's down. It's down quite a bit actually. So even though a positive move in the long run, that's a 3-year weekly. This chart is. Wow, that's actually quite the drop off. It's not what I was picturing to see an update. Pretty oversold actually. It's pretty rare. This has only been oversold one time in the past 5 years on a chart. But it only reaches about halfway down on an RSI for a 10-year chart. So probably not that crazy or something. I'm not quite sure what's going on there. But lumber's moving around, so that's going to cause everything else to move around. Canopy, like one of the most volatile stocks I feel like you can find, is just bouncing all over the place. Where's my diamond sack? It's on its way. I think it must be a shipping issue. But yeah, I don't know. I was having trouble issue with the camera here, so I had to pause it real quick just to get everything to update. But we can go back into here. I have a few that I'm going to go through that are actually from last Friday, and then we should be able to move into all the movers from today and some of the insider movement and see if there's anything there on the dashboard, and then dive into some of those. I'm hoping to kind of get caught up on most of my stuff tonight, so then that way I'm good going into the rest of the holiday week. And I know I just looked at Velo 3D not that long ago, and they popped back up on my screen here, which I just want to pull up a chart here. Sorry, my charts keep all pulling up on the wrong screen here. Let me just update this real quick. Here we go. There, now we'll pull up here every time. So they're kind of bouncing off lows, which is probably what made me notice this. It looks like relatively substantially, although the last time it peaked was only about 75 cents. So this move might not be enough. Obviously, it's pretty highly levered, and you know, there's not a lot on this one. So I think I was more just peeking at the chart. Last time we looked at this, you know, it's still new. It's not generating cash or anything like that. So it's just going to dilute shareholders. And I mean, at 60 cents now, they got to deal with being delisted and all kinds of negatives. You know, debt's 52 million, which I'd have to look to see if that's all actual debt of some sort, but I don't think there's much else going on here. They're a 3D printing technology company, which, you know, sometimes I wonder how much there's a lot of people who can print 3D type things, so I always wonder how much that actually helps with things in general. Johnny, did you see anything today? So yeah, I'm gonna keep moving past that one. That one was just a chart update. Although, you know, I say that, let me just check Seeking, just make sure there wasn't an article or something. Just make sure that there's no big news or something. Sometimes I'm not always looking at Seeking as well for just the articles. Sometimes just you can look here real quick for news. Richard Durant. He's been looking at this for a while. Delays, executive turnover, shift in strategy suggest larger underlying problems, declining revenues, low gross. Yeah, so this is all the stuff we're saying is like, you know, they're young and they haven't proven themselves really in any way. So what did that say about a partial tender offer? Nano Dimensions made a partial tender offer in cash to early in the year at an EVS multiple of roughly 2.4. Did he say what they would what this one is then? Approximately 72 million USD cash and 65 million US debt. So they do have cash at least to cover all their debt right now. So this is the thing is, you know, it's like kind of a lotto ticket in that sense that it hasn't really proven itself, but it also hasn't gotten to the point where like it's at risk of totally failing yet. You know, I mean, I don't know how quick it's burning cash, but this guy says that he uses their technology, so where he at least thinks it's amazing, I guess. That doesn't necessarily mean that he uses it. But yeah, I don't have much of an edge here. I don't really know anybody who's ever used like that kind of metal. Saw Big was up. I think DTTA has some green days lately, but tiny market cap. Let's bounce over just real quick. Take a look at the old chart here. Yeah, Biggs keeps bouncing up, man. That one from the lows, it's already a double. Down to 3.5. I mean, that's the thing too. It's sometimes when the market just looks its ugliest and you get those final sell-offs, that's when you gotta make your move if you don't think they're gonna, you know, truly go bankrupt. But it's tough in this environment, and if I remember looking at Big last time, is it wasn't a pretty picture. I can't remember. Do they still generate cash and everything, or I know they're levered, so by value calculation is going to be off just because. Oh, you're in Big. In high, yeah, that's right. I do remember the high short interest, so that's always something just to keep in mind. You know, short sellers, if something starts to turn around before they're able to get out, and they start to take a little bit of pain, it doesn't take long before they all kind of hop out at the same time, and that can cause pretty big squeezes. Yeah, but this cash flow recently. Although, I mean, over a 7-year average, it's been slightly positive, you know, which you could argue this could be. I actually think $7 is already kind of steep in just the fact that it lost a lot of value on its equity this last, quarter. Things are they selling something? Is that why? Or is it just the lack of earnings? Why is this so negative? I mean, obviously a lot of debt. So, I mean, really this is also a bit of a turnaround story. So it looks like shares attractive on improved margin outlook. Buy rating on October action call. Interesting. I wonder if it's just either this time of year or what. Yeah, how do they keep losing? That's what I'm saying. They lost so much money. It could be a dead cat bounce. That's what the other guy said. Which, I mean, dead cat bouncing and investing is a way to do it. So I'm not saying that I have nothing against that style. But I am surprised it's this bullish. I don't know if that's all. I don't know if that's all the technical guys hopping in, but if you go to a one, I mean this breakout right here obviously was very bullish. Me being my super technical investor that I am. You know, someone in here obviously is the support and resistance there. So as that breaks through, and then you can pretty obviously see that there's another line of resistance somewhere right in here, probably right about there. So I don't know if it breaks through like $8. I would think that'd be pretty bullish, but I don't know. I mean, with this pop today, I mean, I don't know. Maybe that's bouncing off new highs there. Oh, I got you. Yeah, thank you. I worked very hard in these lines, you know, so you can really see what's going on here on this converging triangle here. A lot of technical skills here. So, yeah, I would say this is all very bullish from what I read there, but that's just typically how I do my analyst. But yeah, I mean, mine actually says on Biggs that yeah, this is what I was thinking. I would think it could be worth like $5. Now I know it says book value is worth 10, but it's pretty levered, and book value, it peaked in 20 and 21, and now it's been getting hit pretty hard. It's down to $10 a share. You know, I mean, debt here is really went through the roof these last 3 years. You know, and they do have a lot of earnings, but at the same time too, it's just, you know, and this capital expenditures, I mean, I don't know if they're selling off parts of their stores or whatever to kind of to increase margins, but I don't really see too much. I mean, none of this. I mean, these are averages, so let me go to the 1 year and just see if I'm missing something. But I don't think I am, to be honest. There was an insider, but I mean, nothing. 75,000. I mean, that's nothing that's really gonna catch my eye here. I mean, and these people are actually buying. I mean, this is a few months ago. They're buying it about where I thought it should be. So, but I mean, who's not to say? I mean, it's not like they didn't hit close to the bottom there. I mean, these guys are in the 4s, so that's not a bad buy. But all right, we'll keep it on the watch. You know, if it pulls back, could be something probably interesting here. I just wanted to see, because I kind of skipped over his what he's saying is going to happen. So Bruce Thorne provided positive commentary following the Q3 release. The efforts consequently enabled Big to guide for a Q4, which would see operating results ahead of last year. If that were to come to fruition, it would make the first quarter of year-over-year improvement in nearly 3 years. So it's not that it's good news. It's just like, you know, things are hopefully not getting too ugly. All right, and Dollar Tree, obviously Dollar Tree is probably in a similar vein. So sites on $10 share in EPS by 2026. Big does operate on a strong margin profile that's mostly due to their product mix. So yeah, I mean, I guess any of this being bought in here too, it must be on some kind of growth, or just the fact that they think it's going to return to these. Because where was it? I mean, where is it trading before all this beautiful artwork? You know, around $10. Ugh, I have a hard time thinking. I mean, you got to be really bullish on this to get this back to $10 right now. I'm not saying if it didn't generate some cash and it improved its leverage. Although I keep saying leverage. Let me just real quick look at the operating margins on this. Yeah, and I saw you said NNBR. Are they still going up? Oh, Oh my God. Look at this. Back in May, it was $1. I mean, I don't know if anyone actually held through all this and this back down to the $1.60, but yeah. That was definitely one to hold, man. But once again, you know, something I think it's a good company just kind of keep a watch on. I definitely think if it trends lower, you can see it's worth where it's trading. All right, so operating non-current operating lease liability and long-term debt's 533. So a lot of this is long-term leases, which I know you've heard us talk about if you've ever tuned into the stream a lot, which is basically us just saying that it's not that that's not a true debt, but you can yeah, you can't focus on the ones you miss. You know, if you're gonna cry yourself to sleep, make it on the ones that you got in at the wrong time and got murdered on. Because that's the thing too, you know, with the kind of micro cap, small cap stuff that we're looking at, some of this stuff is really volatile. So it can bounce pretty heavily, and just in general, just with the markets, you know, people are so nervous that we were heading to a recession, and in a real recession, some of these companies are very high risk, and you know, it's kind of why I go back and forth on, you know, sometimes it's probably worth putting 1%, 0.5% of your portfolio into some of these names, especially the really risky ones, because those are the ones that can be 4 or 5 baggers or more. But it's so hard to tell, you know, from a rate environment how things are going to be, and obviously once that turns around, yes, then all of a sudden, you know, if they're going to start to drive interest rates down in a few years, people are probably going to be able to restructure their debt a lot easier. So you're going to see that a lot more often, but it still doesn't make you feel warm and fuzzy when it's at the very bottom there. But I mean, that's contrarian investing. You gotta look through it and just crunch the numbers as much as you can to see how long they can survive for, because it's holding through those ugly periods. If you can hold through them, and anything kind of comes back, then you can really make some money on those ones. You know, because you're supporting the business when they need it. You know, you're the ones holding that share price, you know, so they don't get delisted, and because if they can't raise equity and they have a hard time raising debt, that's the end. And this is mostly just looks like a credit agreement that these guys had. Sorry, I'm rambling. Commitment account, so up to 900, but they're at 550. So this isn't all as bad as it seems. This number is heavily inflated by the operating leases. So that's another thing too. If they start to sell off some of their less productive, you know, box stores, they might be able to just that leverage will naturally come down, at least on a balance sheet. And I know that doesn't really change anything with the business. I mean, you know, obviously you're raising margins because you're keeping your better stores open, but just when people are screening and stuff like this is going to pop up. You know, like another thing too is, I mean, look at the price to sales. You see something like that. That is a pretty bullish number in terms of when I'm looking at some of these smaller companies. Seen that movie, No Gain, No Pain. Yeah. Thoughts on Lum these days? Let me pull it up. I still think that last time I looked at these, I thought they looked somewhat cheap, but I don't remember. I gotta refresh my brain here. Trying to keep a track of too many things here. Whoa, this leverage is insane on this thing. Like, this is saying they should issue so many shares. I don't know. It doesn't look. Let's see what a chart looks like here. Wow, someone got it. Look at this. Look at what someone sold this for. Like, what is this? 50 cents at one point? I mean, that's insane. And I get it. You know, Loom's been struggling, but you know, not really generating too much in cash. Not to say that they're not, but you know, $1.81. So I'm just refreshing myself. I've looked at Loom like a million times, and I never used really their products, so I always just need to refresh myself on what they actually do. It's usually a good thing to know what the business does. Not all people worry about that, but almost gets an error when you look at Loom. Yeah, I know. But you just see 20, what is this, $20 billion? Is that what that is? 20 billion is, that's insane. $20 billion. That just sounds like so much. Who's talking about this? Let's see what people are saying. But I mean, this is the thing too, is I mean, we might just be in the market. Time to cut my losses. This guy's selling on the 14th, and everyone's buying his shares apparently. Yeah, wow, someone bought for 78 cents this. Sometimes I think it's worth just going in there and putting market orders like way out of the money and just hoping that someone sells at market, and for some reason there's not shares being sold and you get it. It's probably what the computers are all doing. Just searching out potential ridiculous sell prices based on market value. So, some of these guys are thinking, I don't know. This has a lot of leverage for me, man. Is anybody else talking about this? Just to see what's going on here. There's a problem sometimes when you search on X. It's just like, just nonsense. Like half of this is just like computers. What is this saying? Sorry if this is super small for anybody. Let me see if I can just zoom in once or twice. It's kind of blurry on me. This is all their, oh my god, is this all their debt? Whew. Yeah. I think it's a little risky for me. Let's find then TSM. I can't really remember the name. Oh, there's tickers with low volume. Especially if some of them, what do you call it? Have, let's see, SM. It's still holding at this new mark, though. But yeah, volumes died right back down. I mean, 2,700 shares moved. That's so low. But I mean, this is a kind of pricey stock for only having, what is it, like over 2 million shares or something like that. It doesn't have most, and like Stavo said too, is like he owns a chunk of the ones that are still actually part of the float, and I don't remember if it was the owners or whoever it was that had the rest of it. But is this right? Yeah, these guys are newer too. Once again, sorry, it's probably hard to value this one. Rollstones, blank check company. Okay, so these are just looking at, it's a shell company. So I'm sure something on my thing pulled them up, but honestly, I'm not really interested in shell companies because unless they acquire, I mean, once again, it's another lotto ticket. You can throw some money into it, and if they buy something great, then good on those guys. And I think if I had a little more time to sit here and spend on all this stuff, I probably would be more apt to buy smaller positions and kind of take on that risk of trying to keep up on all of them. But it's just hard enough to keep on just a few companies that I'm pretty confident in. So as of now, this really benefits to my style. Steel Connect here. There's a big fund, admin, or someone who owns most of it. Okay, yeah, that's what. Yeah, I was gonna say. I remember someone owned a big chunk of it. We'll send this over to the database. This looks like something interesting. So, still connects a holding company which operates through a subsidiary, Modus Link Corporation. Companies an end-to-end global supply chain solution and e-commerce provider serving clients in markets such as consumer electronics, communications, all kinds of stuff. Designs, executes various elements in its clients' global supply chains. Has a combination of industry expertise, service solutions, integrated operations, business, a wide global footprint and technology. Produces and licenses an entitlement management solution powered by some software. So it looks like they have to do with everything in terms of shipping and all that, but a lot of probably data collection and more on the internet side of things. It's under advertising agencies, which is a strange category. Some of the categories, it's like I don't know how they decide some of this stuff. It's safe according to this. Revenues are down pretty substantially actually. Share counts remains pretty stagnant. Book value skyrocketed. Did they have an acquisition or something, or what is going on here? Not even really sure how that can happen here. They have a lot of cash, generated a lot of cash or something here, but I don't see really any kind of acquisition type thing that led to that. Their earnings isn't. Where did this cash come from? Didn't. Is it just them paying off the debt? I mean, look at it. This is saying, according to my numbers, this is net working cash is $30 a share. What am I missing here? This trade's on pretty low volume too. Speaking of low volumes, hey man, have a good night. Johnny? All right, here, let's keep peeking through here so we can find... I'm going to have to look at what people are saying or the balance sheet or something. Something is off with numbers or something here. I'm not quite sure what's going on here. This is from January 17th of this year, though, so it's been a minute. Large amount of tax assets on their balance sheet. Still Connect sued in Delaware over supermajority control deal. Majority controlled at 86% without approval. A majority of disinterested minority stockholders or payments of a control premium share price reflecting the lost value of minority shareholder voting power. Conversion of Series E to common. Do they have preferred? If they do, it's a very small amount. I just want to go to the balance sheet real quick here and just try and wrap my head better around what's going on here, because just those trailing 12 months, they don't make any sense. Another one to go to real quick is just to check Yahoo Finance, just see what's going on there. Was it STCN? So it's not under much volume. And they do have they're sitting on a ton of cash. I mean, I mean that's really the big benefit here is there's just a ton of cash sitting on. So I don't know. let's go back to this and see what's going on here. See if we can figure out how this is. I mean, that is. So there's no convertible notes. There is some redeemable preferred stock on Series C and E stock too. So I'm assuming that's where some of this doesn't work out here. Let me just go back to if I can see what's going on here. Sorry, Bram, I don't mean to skip to your stuff. Sometimes I skip down to the comments, but that comment was more confusing, so it didn't help me like I was hoping it would. There's a large amount of tax assets on balance sheet. They're valuable to Steel Connect or to its major shareholder Steel Partners. A previous proposed deal was rejected by Steel Connect shareholders. Seems likely after more time, Steel Partners will come back to the table with a more reasonable offer. It's a global supply chain service provider, so market cap of only 86 million. However, the company is also sitting on a huge amount of net operating losses, over 2 billion worth of these. Probably thinking, great, they're sitting on huge losses. But among value investors, these are often considered interesting as nulls, as they're called, can be utilized to offset future profitability. So that's the tax asset, because they're sitting on huge losses that can technically benefit them in the future, is what he's saying. The company in the market often heavily discount nulls if the operating company that holds them isn't profitable enough to likely be able to ever use them again. This is sometimes made extra difficult because they expire. So expire somewhat in 2040s though, so that gives them a long time. Once upon a time, there was a lot of activity around nulls, and companies would actively buy up empty shells to use them to offset taxes. But that's been made a lot more difficult. In addition, corporate taxes have trended down in the U.S., which makes them clearly less valuable. Has a 50% shareholder called Steel Partners Holdings, and this allows the company to buy the rest of Steel Connect without triggering rules intended to stop companies from acquiring what are essentially tax offsets. Has a market cap of 920 million. It generates greater profits, so it would be able to benefit more from the nulls. In addition, Steel Partners Holdings owns 4.95% of defense company Aerojet Rocketdyne Holdings. A stake that's worth around 232 million based on the deal struck with LHX, which is a strategic acquirer to buy the company. That's before taxes, though. And AJRD is being acquired by L3 Harris. We'll need to see if that deal closes. A previous deal with Lockheed Martin was ultimately blocked. I'm assuming politically blocked. Unless it was the shareholders, if it was like some kind of vote or something like that. The deal spread is fairly modest. Shares are trading at around $57. Well, it's being acquired for 58, so not much of an upside there. Had actually had an offer in place from Steel Partners to acquire $1.39 in contingent value rights. Contingent value would be based on the sales price of the Modest Link operations for a price in excess of $80 million. That more or less implies a fair value of $80 million for the company that Steel Partners acquires the 50% it didn't own to be able to utilize the nulls. The purchase price also implied that they were paying very little to get access to these nulls. Steel Connect holds about $59 million in cash. Per last quarter, it does $51 million in revenue, $14 million in gross profit, and $3.8 million in gross profit. Free cash flow ahead of about $7 million. Communications related to the investment on the website you'll find here. Hillendale argues that SPLP was underpaying for the nulls and suggested a different deal structure. We're open to an alternative structure where SPLP appropriately shares in significant tax savings expected from the $2 billion in tax assets from Steel. We have proposed a structure where minority shareholders would be granted tax CVRs, contingent value rights, for 50% of cash tax savings at SPLP, which could deliver an additional $2 per share to SDCN's minority shareholders, who hold roughly 38 million shares. It's something of an ultimatum game situation. SPLP owns 50% of the Steel Connect shares because of the tax rules His only viable option is to take over Steel Connect. However, it doesn't share any of the tax advantages with Steel Connect shareholders. These have minimal incentive to let the deal pass and feel cheated. In the ultimatum game, 2 players have to split $100 and player 1 may... Okay, blah, blah, blah. So basically they're saying they're going to kind of be strong-armed into it unless, you know, something else goes on. That's what happens to funds that get lowballed out of the investment. SPLP is also somewhat of a serial acquirer, so the odds of something happening here are less than remote. Another thing that's different about real life is there's no real ultimatum. Steel partners can lay down a deal, but Steel Connect can more safely reject it as long as the nulls haven't expired. Even without the deal, it can squeak out value out of the nulls. The L3 Harris acquisition of Aerojet could provide a nudge here. If a deal's off the table, I can see it trading down to 70 cents a dollar per share because of special situation investors selling out. However, I'd argue it makes a fairly compelling buy at that level, given that this is a profitable company and it could grow and utilize some of the nulls itself over time. On the upside, it appears that he would say about 335. And he's just saying that, you know, because the ultimatum doesn't really exist, it could take a while. And this is, okay, and Hillendale was the one who responded here and put this. The partner's purchase of Connect was not approved. So these guys are saying to actively get involved in trying to persuade the board to agree with the minority shareholders and force them into shares and possibly a precursor to deregistering the company to add pressure to more of you to accept their next buyout proposal. So it looks like they're going to try and limit shares here to force a buyout. What an interesting mix. And on top of that, who is the... So this is Steel Partners Holding now is trying to buy up more shares at 960. So they're trying to... They're kind of being forced to try and get this cash out. But they have till 2040, so obviously this isn't like a big rush. Let me just kind of keep reading. One for 3,500 release stock split with the commons, followed immediately by a 371 forward stock split with the common. Charter to effectuate the reverse forward stock split. Each share of company common stock held by a stockholder of record owning fewer than 3,500 shares of company common stock immediately prior to the effective time of the reverse stock split will be converted into the right to receive a payment in cash without interest equal to the value. But this is from May 9th. So when was this last talked about? On September 7th. And was this the one that was from January? Okay, so this is... this has been around for a while, but this is an interesting special situation. And now they just had a good EPS and a good revenue. All right, well... obviously, this one's going to be something to follow, basically. I'm going to give it a 3. It's a little small, but that's not really a big deal here. There's ownership. I would say there's a good narrative because it sounds like shareholders could benefit even though they're going to kind of be fighting with SPLP. The holding company, but it's an asset play. Let me just go back to just looking at the fundamentals here one more time. They just have a ton of cash on hand because of that. And margins over the past like little bit have been good. Everything's been decent. So I mean, the company's been running well too, just on that aspect. But if you go to some cash flow type metrics, I mean, wasn't not worth a lot. You can say that for sure. I just want to go back to the chart here and just see very, very low movement here at the $9 mark. But some of these special situations are things to kind of watch on. Because if they really want the tax assets, if they put out like a fair selling price for the stock, I think personally, I'm going to wait for a little bit bigger of a pullback here. But yeah, I'm going to definitely put this one on deck. This is interesting to me. Is SPLP? I think that's what it was. Needs tax assets. Convertibles. Just so I remember that. I will put that in here, that there's preferred that's convertible, just as a reminder to myself. Just to find a value on this. I mean, the cash right now makes this valuation very high because it makes book value look insane because it's got $35 per share basically in cash right now. But those assets aren't like you can't just like take them. So I don't think this $24 is a terrible. Let me just look at the chart one more time here. Yeah, I mean, I think I could see this at least get to $20. If I'm going to be conservative, I think it could at least hit $20. And since we're not in a rush, I'm still going to put like probably around $7 is a great pullback price. Now, if it gets to $7, this becomes very interesting to me. I'll say that. I mean, 927. It's not like it's like super high, and it has been pulling back. Sorry, I got so many windows open. I keep clicking the wrong thing. It's been trading pretty steady in the nines now for a while. I mean, we would need a serious pullback, like even $8, on something like this. If I saw that, as long as the chart didn't keep looking super bearish. But I mean, this is showing support, if anything. The volume is very low right now. Which, when someone buys in here, there's a lot of interest when things get cheap here. And just from a company perspective, it's been trending down the whole time. Probably like eliminate so much of that chart right there and get rid of that. So this is one thing I always just kind of look at between this section here and this section here. Sometimes you can kind of just instead assume that this would have been somewhere in there, give or take a little bit. But the whole COVID area here just always kills charts. It's just an anomaly that I think you kind of have to account for whenever you're looking at these kind of things. One last thing to check from these guys is I just want to see they have the transcripts on here. See, I don't know if you guys can see that well enough. It's a little. I was just seeing if I can figure out what management's saying is gonna keep coming from the future here. Yeah, more than 30 years, but nothing real impressive in those 30 years, it looks like. I mean, you know, revenues have peaked in 7s and 8s, and now we're down to 179. I mean, that's is this really old? Oh my gosh, I'm looking at something so old. You guys could have told me that. Someone to warn me here. I need some people come check out that. All right, either way. So it's not updated enough for me to really get much out of it. Looks like we had one buyer. That's the whole chart there. Yeah. But they do have earnings, you know, so. And I say that the idea that they also have cash flow. You know, if they just have earnings doesn't really mean much to me. But if they have cash flow too, that's where I get interested. We'll go to the old IMP. All right, let's see what's going on here. It's a shipping transport company. I know I've looked at these guys a bunch of times, and what did I say about these guys last time? So I said 260 on 1012 I thought they were worth. It did pull back. What I say, 130 would be an entrance here. Oof, it just didn't get down quite to where I wanted. You know, if I probably saw it on one of these drops here, and I was probably hoping for more of a pullback here, and I just didn't quite get what I wanted. But it is a double, so it's not like the. It's young though, and this is one of the ones too that you don't have a ton of data on. Sometimes the ones these Greece-based shipping companies and stuff, like some of the numbers can be all over the place. A lot of times I have to really double check everything and make sure everything adds up. Henrik's commenting on this though today. Or to grow the company's fleet. However, the company has reversed course in recent months with the announcement of $10 million share repurchase program in early September and subsequent buybacks of common shares and warrants. Harry Vafias now controls approximately 35% of the outstanding common shares. So he's aligning with shareholders. Even after 150% rally from recent lows, the company's common shares are still trading at a massive discount to estimated net asset value. So he's rating a buy rating on the company's common shares while assigning a price of $460. So he is bullish. And I mean, if these numbers hold up, you could easily argue it's worth $5. A $10 million share buyback. So what would that be at a 286? If that's the current share price here. 2.86 would be 3.5 million shares. Wow. That's not too shabby. Sitting on cash. They got the cash to do it. So they're buying ships, spending on capex. So just to show you where you can, on mine capex. So they're spending, you know, $100 million, $43 million, trying to get things going. And they've been diluting shareholders. You know, now they're up to 17. So that's the other thing too. Some of these things are going to buy. Like you're going to see my book value here is at 385, but this is a super amount of shares. Like it's hard to even justify that. But it is interesting. I mean, it's trading cheap on a lot of metrics. I just want to see who else owns this. This is it. Just can't be right. Let me see here. Let's make sure. Oh, do they have preferred too? No, who's this one with extra P? Who's the extra P? Yeah, who are you? Interesting. So now I just want to double check, make sure I'm not going crazy here. Imperial Petroleum. If you go under, no, not seeking. If we go into the SEC, I just want to look at their actual (20F) here. So they do have this preferred here, and that trades at 21. And this is long-term debt, but I mean, they got all that in cash. So 10 million in, or is this in thousands? I think it's in millions then, because it doesn't state. Yeah, it's got to be. But see, that doesn't pop up on here, so it's kind of a pain. That's sometimes the issue with share radar data is it doesn't pull up. So I mean, they do have debt. So this number's not quite what I was hoping it would be. So what I want to do actually is just do some of my own calculations real quick here. All right. And it's not taking into account the preferred though. Not super bullish on that, but no, I just want to go right to his article here. From recent lows, still trading a massive discount to estimated NAV. Yeah, I mean, I see what he's saying. It does seem cheap on those metrics. Some credit for its debt-free balance sheet and strong liquidity. So what am I seeing? Is this old? Is that all like? Oh, so this is December 31st of 2022. So is there something more updated than this one? Let me go back to here. No, that's still. Oh, okay. He's 460. 18 months streak of relentless dilution. Imperial Petroleum has reversed course and starts to engage in share more buybacks. Even more importantly, is now sufficiently aligned with common shareholders. Okay, rapes people and then seeks to profit on both ends. Timothy's giving them the old moral whipping down. I don't know too much about the what he did in the past, but he's saying apparently, you know, the way he's bouncing back and forth, he's kind of sticking it to people, you know, left and right in order for his own benefit. Which, you know, is there people out there in the world that do that? Yep. Just closing up some of that stuff. All right. Well, this actually has a bit of a interesting turnaround as well going on here. So let me go to here, preferreds. They still pay dividend? I had a dividend in here. I didn't think I noticed a dividend. No, I don't know if that was a one-time thing or something I noticed. Poor management's what I said last time. That's probably why I was a little off there. I'm going to say good narrative. You can change it so it actually paid off, not pay fit off. I'll go with just about what I think it is in terms of price there. So I'm saying it's worth 307. So this one's interesting. We'll throw that on deck as well. We'll bump it up just because of the small insider here. Insider aligned with common. All right. Not that one. That one's interesting. We'll see where that one goes. I'd like to have someone else just come in and talk more about that balance sheet, but you know, Henrik, when you start to tune in or something and you want to, you know, throw your 2 cents in on that, you just let me know when. All right, man. All right, Southland Holdings Infrastructure Construction Company operates through civil and transportation, specialized infrastructure construction service across North America, including bridges, tunneling, transportation facilities, marine steel structures, water, wastewater treatment, and water pipelining end markets. So a lot of things to do with infrastructure. I have looked at them before. If I remember right, they were kind of growing, and I don't know if they were too expensive or just kind of what. I know they had the debt, so they do have debt here, so we can look at it and see what that's all about. This particular last 12 trailing months haven't been anything fantastic, but there is a lot of insider right now. 12/21. How is this pulling in data for this far? Oh, I'm pulling in yearly. I was gonna say, I was like, something's off here with my data here. I just gotta update this and make this my looking for quarterly, because that'll make this look more. Oh, okay. I was like, that looks strange. So still not generating cash flow yet. The share counts are still going up. Here's a fast grower. The debt is higher, but within reason. It's all basically to see how quick they can get this into some kind of profitable range, because margins are kind of all over the place. They look okay. You know, I mean, not like great by any means, but in terms of, and they're diluting too. So I don't know. That doesn't really speak too well of things here. Let's see here. Only one person talking about it from September, and I don't think he's really touching on too much in detail here. His price can change significantly, exposed to various commodity price risk. Blah blah blah. This isn't really much analysis, in my opinion. Let's see here. So SNL or SLND, $1.49, book values decreasing and will continue to decrease. I don't honestly see too much here. Let's start to take on debt. All right. It's a little harsh, but yeah, I mean, they need to really turn this around. I think this is going to continue to get driven down. And as always, just as part of my disclaimer, guys, you know, you've probably heard me say it 100 times if you watch any of these. The values here are not indicative of any time to ever buy or sell a stock. It's a lot of just quick looks for me to check things. It means something to me, probably a lot less to most people. All right, let's disable this here and we'll save this. And then let's go see what's moving today. So we're going to bounce over to my dashboard here. We'll clear this out for a second just so that gets this updated. Let me see if I can go through some of these. We can probably just get rid of this page. I don't know why I got so many of these things open. I haven't looked through some of these in a while. I got to go through my actual dash and just try and find some of the industries and just go through, because sometimes it's good just to kind of check through industries. I'm still working on my on deck portion. We're just going to pull out just my tickers that I have on deck, because typically that's a pretty good grouping of stocks that when they start to hit around what I'm thinking of a fair value, that they're probably worth looking into. And then my watch list, I've taken stuff on and off it a bunch of times, so that I got to clean up too. So I'm hoping to get that stuff kind of cleaned up here next time I get a chance to really go through this stuff. Let's take a peek at Canopy. It's starting to spike on some lows here. But I mean, yeah, the volatility on this thing is just always crazy to me. Never drops below $4 though, that's interesting. Rig is another shipping, well, it's a really offshore drilling more so, but got back down to 560, huh? Now it's starting to look pretty bullish based on that chart. All right, so let's update to today. All right, so I had just looked at these guys and they're up 173%. Wow. Look at that bounce. That's some volume right there. No, not intraday. I don't care about intraday. Oh, that is the 1 year chart. Just because I'm curious. We're going to go into here. Just see if we can figure out what's going on with this one, because it looks like I had just looked at these guys. I rated it okay. Obviously, they're a younger company, so sometimes it's tough to really evaluate things that are too small. So maybe it's just, yeah, I just didn't have much to go on. You know, I'll kick myself if I think there's something I missed. But when you have this little amount of information, it's pretty hard to go on. See if anybody did say anything about it though. Oh, just in 1 day, so. Or is that the 1 year? Just a bunch of shares were bought, huh? Is there any reason this did what it did? This is all just traders. Is there any news? I mean, it's kind of the annoying thing sometimes is when you're searching on here. I know what traders are looking for, but for the rest of us who are, you know, trying to figure out the business and what the hell's going on with it, it's sometimes it's just very confusing on Nah. Okay. Not a big deal. Excuse me. Alright. Keep going here. No insight or anything. I mean, it trades well on these metrics, but I just don't have enough time to really go off those to... I like to get just a little more data to be able to understand what's going on there. I have a really hard time valuing stuff, but like even if I only have like like 3 years is like bare minimum sometimes. I mean, unless there's like a really compelling news story or something, which is super rare for me. I just don't usually have the confidence that I like to have going into a position. And like I said too, it's not a rush. It's never a rush for me. That's one thing I always remind myself, that with my style, because I'm taking concentrated positions, like you never want to rush into these things because that's where mistakes get made. A lot of this stuff has bounced pretty good off the lows, so I'm not a bunch of this stuff. Yeah, I'll be able to just kind of pass over. Sometimes I tend to find stuff that's like kind of been, having the pullbacks. That's tended where I find some big finds. Just because people start to discount stuff when it has too much of a pullback here. I don't know what's quite going on with these little boxes here. They got squeezed in here somehow. Over there. Sorry, I'm just trying to... This is the kind of thing that, like, oh my gosh, there's so many little things here. Eventually one of these will bother me. No, I'm just trying to grab the one here. There we go. Sorry about that. I don't even know how that gets squeezed down there. Like, never have touched that. Where is that weird error coming from? It's not like the margins or anything are squeezed, like in terms of like the cell size. But whatever, doesn't matter. A lot of healthcare, is moving. A lot of biotech. A lot of this stuff. I know I've said it before, but you can just kind of, for me, I can cut it out. I'm not saying there's not something that ever pops up in there. Care Cloud keeps coming out. This has been looking pretty good. This was another one that we were looking at and just kind of missed it on the bottom there. I gotta start going through the charts for 52-week lows because it's a pretty good breeding ground for ideas. Just because some stuff just gets so cheap, and then there's a lot of different little metrics you can find that there's no reason something should be trading at that low. Now, like I said before too, with the rate change in the environments, I do think that that's a huge reason why a lot of these more riskier names are popping back, because people want to get into these names, especially as they start to come back. You start to see people less risk adverse coming into them because now it doesn't look like it's quite as risky as rates come down. If they need to take on debt, that sort of thing, or restructure it for that matter. FSI looks definitely interesting. On a lot of metrics, actually. you know, 86% to the upside, but it's definitely worth looking at. Big lots, we had literally just touched on these guys in the earlier part of the stream. You know, the issue here too is they got to improve this. You know, they're paying. Are they really still paying a dividend? I hope that's gone away. I hope that's gone away. Doesn't make any sense. Mullen's been all over. I mean, and down. Usually they have small pops, but it's like a Tesla that doesn't ever seem to be a Tesla, really. And I think a lot of people lost a lot of money on that. There's some harsh criticism for I can't remember what their manager's name is, but man, people are. That's a love-hate relationship for that guy. Wow, look at NNBR. Every time I look at that chart, that just irks me that we were looking at it around $1. Johnny got in. Johnny was the smart one. He made the poll. I at the time, it must have been focused on something else because I don't know what the hell I was thinking about. Because when I look back, it looked to me like a decent entry point, really. I know that GigaCloud's kind of been bouncing off highs. It's back up though. Looks good. I own that in a different kind of portfolio because, like I said, I do have I think 5 portfolios, and each of pretty varying styles, just because of the nature of just testing and trying things. You know, I'm not too old where, you know, I'm killing myself to take on some extra risk, obviously. That's healthcare, so not super interested in that. Rack space traded at $1.96. That seems high. But they do generate good cash flow. Price to sales is good. All right, let's go to the daily losers. Let's go to the losers. Update this real quick. All right. It's pretty young. No labs. Yeah, this one I don't trust the metrics on this. Golden Heaven, no offense. That one pops up all the time, and it's just there's nothing on that one. Ebix is one that's been interesting, but really disappointed. It's really what happened there. Just take a peek at Zim. Got down to 6. Take a look at BuzzFeed again. I haven't looked at them in a little bit. And you'll notice I'm not always going off, you know, all the same metrics. Some of these things I've looked at before, and sometimes I just pull up names just to kind of get an idea on things, see what's going on, see what's moving. We go to insiders real quick, just see what's been moving the past day or so. I think this insider with CareCloud here is kind of what got us interested in the first place. High peak energy. You know, and a lot of these names, typically if you're seeing me hop right to the chart, that's because I've already looked at it. You know, and you can see in here my dates. Anytime there's a date that pops in here, that's when I've last looked at it. So, you know, some of these bluer ones, that conditional formatting is just to remind you that, hey, you looked at this like pretty recently. So, because sometimes I'll peek at something and it doesn't really catch my eye, and then I'll go back and either do a deeper dive, or when I see it next time, I'll be like, nah, that's not for me, and just pass on it, for better or for worse. It looks like they're commodity based. That's energy. Some of these are too big to get into. Like, you know, I see FedEx, and it's like, that's I'm not buying FedEx. It's a little late, in my opinion, to hop on the FedEx bandwagon. Not that I think that company's not doing well, but it's just for my kind of style of investing. Yeah, so as I'm going through here, sadly, I'm not seeing too much that's really catching my eye too much. You know, something like I said, Dollar Tree, not really my thing here. Wow, look at this. Cliffwater Corporate Lending. That's some serious insider. Whoever bought that. That's some cash. UEIC, I was just looking at they kind of look interesting. Let me close out some of these. I'm assuming that this hasn't slowed down the stream too much. Anytime I seem to look, it looks okay. So I figure having all these tabs open is not affecting the stream drastically by any means. So, you know, we try and rewatch some of these just to nitpick ourselves, you know, because we make all kinds of stupid mistakes like the start of this. That'll be one of our shorts. If you haven't noticed, our shorts are literally all our mistakes. So the shorts probably make us look like complete idiots. But that's kind of the point. I kind of want to pull up them again, even though I know I keep pulling them up. Sometimes that's a good thing. Something to make your brain think about. What was going on with Southland? They're just... Higher request. Okay, nothing too crazy, but it's all good. Just save on that, and then I'm gonna bounce back to the dash here, and then just take a peek around, see if there's anything that's catching my eyes. It probably should be. Like, I know shipping's been like up and down a lot, so it's just probably telling you to pay attention to. Maersk is a big shipper, so that's why. You know, RK was the one who actually, I think that's what he used, so that's why I went with that, because I don't think there's really great shipping ETFs. I mean, nowadays maybe there's one that's up there, but and probably periodically I'll go through and update, you know, some of these. Half the time there's something in the data that fails, and then I have to go back through and manually change some stuff anyway. So a lot of times, just because it's more of a pain in the ass just to keep things updated, that's kind of how I'll do it. But yeah, I mean, nothing crazy. I mean, oil, energy. What is this? Oil and stuff in general is kind of moving back up. What's oil doing right now? I was gonna say I don't know where they're getting that number for oil, but that's not what I would use for this. Is the continuous contracts, 75. So I don't know where that number's coming from. But I mean, that's like the normal price of oil. I'm like normally looking at is like, yeah, $70 to $80. Maybe 90 on the high side. At least lately. Obviously it can go above 100, but okay. I'll have to figure out if that's going off an ETF or what the hell that's going off of. But we can go back to our fundamental page here. And we'll enable this back on. All right, so first one that I had pulled up is Flexible Solutions. It's engaged in manufacturing, marketing biodegradable polymers, which are used in oil, gas, and agricultural industries. The company also develops, manufactures, and markets specialty chemicals that slow the evaporation of water. Its products include heat saver and water saver, liquid swimming pool blankets, which save energy and water by inhibiting evaporation from the pool surface in a food-safe powdered form of the active ingredient within the liquid blankets, which are designed to be used in still or slow motion drinking water sources. I'm sure it's safe. Definitely safe. Small. So, and you guys will see, I mean, I'll go into market caps that are 20 million. I understand that's an added level of risk. But, if you have a leverage that shows up like this and looks safe on most metrics, I mean, it's just generating cash. I mean, look at this, just almost entirely. It's a few years here where it's basically struggled, but other than that, looks pretty good. On a lot of bases, this looks pretty cheap to me. Obviously, the issue right now is what's going on with those revenues. I mean, still up on average. We're up, so it's not like an alarming thing. And capex is $6 million right now, so we got to figure out what's going on with that. That's only $8 million. They got $9 million cash, so overall, this is definitely a very safe business in terms of that. As long as this capex doesn't continue to be that $6 million, that just seems high. Margins. Are historically pretty good. Few rough years here and there, but in general pretty good. EBITDA is pretty good in terms of what they've been doing. Not common here. It's pretty stagnant too. So even though it's smaller, it seems to trend within this level pretty well. $1.85. That's on 79,000 volume. Anybody buying this recently? Daniel has been selling. A lot of sells. This guy's been selling the whole time. So, not that it doesn't mean something, but it kind of almost means a little bit less to me when someone's just selling like that, because, probably just... obviously we got a big price movement today. he bought in August. How is this saying it was up 116%? Since when? What are we on? Is this a 1 year? But since when does this become 116%? Strange. I feel like the numbers have been off on this website today because I keep seeing things like that are acting like these are having gigantic moves. Like what was my dashboard saying about this? Was this an insider or was this no? This has to be a daily mover. Oh, by the way, wow, Playboy's returning from the dead. I don't think it's worth anything, but I wonder how long down that was going to go because that was just it's just such a brand name. Yeah, 13%. But a lot of potential trade in and out 3 times between the $2 and $4. Another opportunity along a few hundred shares. This is like a real article. I feel like half these articles are like a computer. Like maybe he wrote this part. This is just a nonsense article. I need someone who's writing something a little bit more in depth than that. So there's a management issue here, which makes sense because we're looking for issues with $1 million share compensation, I think is what they were just saying, which is insane for how many shares is this? I only have 12 million shares, so I mean that's a lot. Her debt 7 million, 8 million in cash. It's a lot. So it's on 3, so 400. Yeah, so no, I guess it's on par. Okay. But it's still a lot. I'm not saying it's not a lot, but so operating income was negative. Last 3. Did really well in 22. What's with all the stock-based compensation? So much. Just a line of credit. No, they have a mix of things here. They do a lot of acquisitions. Nah, not so much. At least according to my data here. That's something that I'll have to look into a little bit more. Want to look at some of their actual products. I know it kind of talked about it. So same thing. Yeah, I'm not getting much from that, sadly. Looks like they did pay a dividend recently. It's like I said, this is small, but it's kind of interesting. Definitely think this could be worth $3. Which means, yeah, I said needed sales growth. On everything else, it looks decent, and in terms of market cap versus revenue, I mean, and not a lot of debt. This one's interesting for me. You know, if this was to pull back at all, I'm interested for sure. So obviously not going to do this on here, but next step will be to go through the Qs and the Ks, figure out if I can agree with what's going on, and because the news articles there with on Seeking Alpha, that wasn't really anything that was really impressive on my side. But it just looks kind of safe in terms of if I was going to park capital there. So, builds and sells portfolio brands for millennial audiences across food, blah, blah, blah. I feel like I know BuzzFeed. What is that? Is it like a HuffPost? Yeah, I mean, some of the names of different, it's almost yeah, like as a digital media. I don't know if BuzzFeed's the actual website or whatnot. I don't know why this just popped over here. Let's just see what the website actually looks like. So it's just news. Tasty, hot ones. Okay. So they have a few different things going on. Interesting. And young in terms of the filings here, which they've diluted pretty well and are obviously leveraged decently. Pretty levered. I can see what that leverage actually is. No, wrong one. That's 157. A little bit of leases. Still losing money here. Let's take a look here. Revolving credit facility, and they have convertible notes. Due on 26. Convertible with approximately 12 million shares of Class A stock at an initial conversion price of $12.50. Okay. Let me see if anybody's talking about it. He bought a speculative position. Has not panned out. This is the EPS of minus, which misses by 1, misses by 11 million. So it looks like in general they're just struggling to really become anything positive just yet. A lot of these companies, it sounds great at first, but they don't have enough of a product, you know, and it's tough. I feel like it's tough, and I feel like you have to be such a big-sized company to really make a ton off advertising. I'm not saying you can't do it, but, you know, if you're splitting that money up and you're trying to, you know, they're buying all these different brands and stuff. I didn't even look to see if it's taken into account. Yeah, I mean, you know, you're buying something for 196 million, and now your market cap's 41 million. It's, you know, you're spending a lot. Cash burn of operations of just $200,000 in a cash runaway of more than significant of $600,000 over the trailing 12-month free cash flow of $12.7 million implies a lower cash runway if the company fails to control future costs. Will likely not require external capital until fiscal 2025, except against this. Critically, a failure to reduce cash burn would materially slim the time required, so they could have to dilute or something even faster. Is anyone commenting on this? So they're just saying that there's nothing's really improved here. You know, ad spending is declined. It's got some short interest. So the shorts must be loving this. We'll just pull up Yahoo real quick and just see. Hang on a sec here. They do have those warrants out. I mean, this is pretty ugly. But this is volatile too. I mean, look at the volume here. 1.9 million on the sell-off. I don't know about you, but that tells me that you most likely don't want to buy on that heavy of a volume of. Let's go in here to see the short interest one. I mean, whenever that article was written, it was much higher. Yeah, this is from July, so. And you know, sometimes you want to see like more recent articles, but even from July, that's not. You can kind of see from there what people are thinking, and nothing's turned around. I mean, this is a need of a turnaround story. Did I have these in here? BZFD. Yeah, that's what I thought. Needs more. And I had looked at them a while ago, almost a year ago, it looks like. And even back then, I had valued it pretty harshly. But it's kind of right about where I said it would, you know, in terms of checking again. I'm not going to say bankruptcy is the issue just yet. Notes due in 26. So, according to that, it's worth looking at right now. But let me just close out of this. I don't know why it's doing this where it gives me new windows when I'm pulling some of the stuff up. But it's a rough chart. Find some support here, but it never really seems to push out of that. Alright, we'll pull up UEIC one more time here. Which I've looked at some of these a few different times. We got 9:30. Yeah, we'll go through this one and then I'll probably start to wrap up things. And then we'll follow up when Johnny does his stream on Thursday. I'm hoping over the next few days to just get some stuff adjusted with the spreadsheets. Kind of help me keep an eye on things better. It's just so busy lately. Gosh, you have a kid, one kid. I don't know how people do it with, you know, a ton of kids. People have like 5 kids. Ugh, I don't know how you do it. Two's gonna be my limit. I can tell you that. Because between that and everything else, life is busy. The insiders are still buying here. Toro, or 12.5 was their last big buy. What did I see this on Insider? Is that what I pulled it up on? Let's see, that's yeah, it's still spitting off cash. Let me just see if anyone else has said anything going on here at the end. Let's close out of so many stupid tabs. Yeah, still nothing. Announces cooperation agreement with immersion. Who is that? Eric Singer? Why do I know that name? IMPP. Have I looked at them? Yeah, I have. Okay. See, I know that name, but Eric Singer, President, CEO, and Chairman of Immersion, as a new independent director to serve as Class 2. The board has appointed Eric Singer to its compensation committee and will nominate him for the election to the board. Additionally, in terms of the agreement, Immersion has the right to identify one additional member for appointment to the board effectively immediately. Who owns this? Toro owns it. Is that their only holding, right? We talked about this last time, yeah. What else? Field of sensory technology. So like immersive technology. And now they're looking at cooperation agreement with Immersion and certain of its affiliates. I wonder what this means. What are they doing? What are they going to work on together? Because if I go to this could actually provide some real synergy. I mean, you know, if these guys are dealing with all these different, you know, kind of devices throughout the house, and now Immersion's dealing with something in a similar realm for tech. That's interesting. Toro involved would be considered. And I know it's been ugly up until now. Like you kind of have to ignore some of this in here, which easier said than done. I get that. But that's the question: is what can we do? What can these guys do to generate some value to themselves again? And sometimes it's just like this change in narrative that now they're working with someone else. Just as one last thing, just to check real quick, let's pull up Immersion and just see how they're run, how things are looking there, because like these guys were on deck and they look like they've been doing pretty well. I had to do a little bit of share count there, but it looks like they don't have debt. So this is well run, generating earnings, generating cash flows, good margins, dividend. Just one thing while it's pulling up. I mean, this might be more bullish for Immersion than it is for UEIC, but nonetheless. Sorry, a lot of this has been reading, but that's part of doing this is a lot of times you're just trying to you're always adding to your information about these things, and you'll start to see a lot of these companies that you've seen before, and each time you tend to dig a little bit deeper into different things as certain things interest you and certain things matter. Fringements. Didn't they? Yeah, didn't they? Maybe that's why I've heard of them, because is this one of the ones that sued Meta or something? I mean, this doesn't really answer any of my questions, to be honest. All right. Bummer. But I don't know. Maybe we can see in the future some kind of cooperation between the two. I mean, that would be the hope, that you can find something like that helps you to understand these kind of things better. But yeah, all right. So definitely some tickers I found interesting tonight. I'll continue to look into those over the next few days. And these are kind of ones that maybe if I do see pullbacks, I might start to take stakes in things. Just for nature of the stream and whatnot. I'm probably not gonna tell you that I'm gonna take a buy until after I've taken it. Just because I'm not trying to promote stocks like that. And after I bought in, I'm already in it. So that point, if it does tend to go up, or down from that point, I've already put my stake on it. What I think, and from there on, we'll have to figure out where it goes. And from that point on too, it's a little bit different once you're in the company. The way you're following it. You put money into something and you're really watching every day. It's hard not to just to check on things real quick, especially if you only own a few, because then you can really keep track of them. So for better or for worse, probably sometimes makes me, a little quicker or slower to move than I should. Probably more on the quick side, but at the same time too, I tend to buy in on the entry side pretty heavily. It just depends on volume, really. How quick I think I can get into something, and then on the way out, it's always a tranching thing. Always, I'll never just completely sell out unless maybe I got like some crazy upside, but honestly, even with some crazy upside, I'll probably just lock in the returns and then start to take things from there. But so probably what I'll do is go through some of these tickers again. I might add some of them to the watch list. And if you bump up from my on deck to on the watch list, it's pretty much that I'm starting to think that there's close to enough of a catalyst for me to enter into these things. And then if I see like insider buying or something like that, or the news story, or even if just there's a day where it looks like the news is finally catching on for whatever reason, that's where I'll probably finally take a buy in things. But like I said, I take my time with these, and if you hit a double with your entire portfolio or half your portfolio for that matter, and you're able to double up pretty quick. And when I say quick too, like some of these things they can take a year, but if I'm doubling a huge, like if I go in 30, 40, 50% of my portfolio into one company and it doubles, then I don't care if it takes a year. I mean, that's insane returns. And, like I said, that's why Johnny and I always say, that's the huge advantage you have is retail. That's kind of what interested in this style anyways, because most people aren't doing this. Most people aren't looking at these kind of things. And then the other thing I haven't done in a while that I got to go through and do is go through some of the bigger funds, see if I can figure out if there's anything people have been buying that maybe I just for whatever reasons kind of skipped my radar, because sometimes you find stuff through those. I'll go through all the filings, Burries and some of the other bigger funds that I tend to look at just to see if there's anything that they're buying that might interest me. Problem is, they're always delayed and it's always a long term out. So a lot of times they don't correlate because it's something that if they're in, that doesn't really give you a ton of confidence that they're still in it. That depends on what the play is, and you can pretty much tell that pretty quickly just by reading the current news on something, and you'll have an idea if they're most likely still in it or not. And if they're confident enough to be in it, that's a big confidence boost for me. If I like it, based on what I see, and I tend to if I see they're in something, then I'll just leave it at that. I'll start looking into it and then take it from there before I read up anything more if they said more on it specifically. Icon, those kind of guys. But I think that'll pretty much do it for today, guys. So, like I said, I'm hoping to update the watch lists. If I do end up hopping into anything, I'll update everybody. I'll update the portfolio finally on here because this portfolio is old. I'm not even quite sure. So a lot of these names, I've taken my gains on, and or trimmed these positions. So, but it is time to start kind of bouncing around on some of these things and see where we can move up or down on, in terms of getting out of these things. But other than that, everybody, like I said, hope everyone had a nice holiday and continues to enjoy the holiday weeks. If you got time off and whatnot, try and spend it with your family. It's always important. But happy investing to everybody. Hope everybody has a good night. And we'll see you on the next side.